Yo, what's good, boys? It is Charney here, second week of January, so this is going to be my second weekly recap. It's currently the 16th. Got the monster, of course, bro. You boys know in the Discord. We love the white monsters. But anyways, to the trading side of things. So this week was very, very slow. We only had, well, in my session at least, 4:30 a.m. to 10 a.m., we had no trades this week. We had one setup actually on NQ, and I literally was only able to take it on one account. It was a flip entry, and literally it was a flip entry entered, and then it was an aggressive entry. A few of us took it, and then it just ended up losing, and then that was it. That was literally it. I didn't even have time to place it on my CFD accounts and my Forex accounts, like stuff like that. It was literally just one futures account. And that's something I'm gonna touch on today because I looked into how our strategy works with the higher risk rewards, and there's some stuff you have to look into on what account type actually best fits shooting for higher risk rewards instead of just shooting for 1-to-1s or 1-to-2s. So I ended up actually just switching from that account entirely. So it really would have done me no good anyways. I'm pretty much about to I hit the profit target on one of my funded accounts, but I still have to hit the consistency roll, so I still have to hit another 1-to-4, and then maybe a 1-to-2 or something to offset it. So but the profit target is already hit on the one. So yeah, that's the problem that I came across. A lot of these accounts, they were always going to have a consistency roll on the valuation and the live account, but some of them, they only have it on the evaluation, and on the live account they just have the 5 trading days where you have to have 5 days that are profitable before you can take it payout. And that is literally the best way to go about it, at least for our strategy, because we're going for higher risk rewards. So consistency rule of 40% or something like that, one trade is going to take up more than 40% of our profits. That's just how it's going to work. So at least without the consistency rule, you can make you can make $5,000 in a day, make $200 in the other days, and still get a payout. That's the way you want to go. And the accounts, yes, are more expensive, but down the line, it's 100% worth it. So I started with the standard account, and then the more I looked into it, I was I'd probably want the Alpha Futures Advanced account. So it's a lot more expensive. I think it's $139 a month, and then obviously once you pass, you don't have to pay it or anything. But yeah, so the standard account is almost passed, but I'm not really gonna do much with it. I mean, I guess I could aim for 1-to-2, so that's really not my main priority right now anyways. But yeah, that's pretty cool. But like I said, I still have to get another 1-to-4 and then a smaller trade to offset the consistency rule. It's a little weird, but regardless, I started fresh with an advanced account. We wasn't even able to take that NQ trade this week, so we literally had no trades this week. Now I do have trades to go over. There was 2 trades, one in my session that some people took, I didn't take, and I'll explain why. And then there was one in it was 3 in the morning, and I started trading at 4:30 in the morning, and actually by the time I woke up, it was almost still at the entry place. If I would have woke up 4:15, I could have actually got the same entry I would have if I would have entered initially at 3 in the morning, because it consolidated sideways for a while. But it was just a little bit too late. It ended up taking off, but the 1-to-4s hit again. So that goes to show, higher risk rewards for this strategy is actually eating right now. I'm super happy I found that out. And yeah, but I'll show you guys the charts. I'll show you guys the positions that at least popped up, why I didn't take them, why I would have taken them, and stuff like that. So yeah, let's get into it. Okay, so here are our positions for the week. Very slow week. Normally we can count on at least maybe taking 2 to 3 trades a week, sometimes a lot more than that. But yeah, I don't really know what to say. Yeah, just a slow week for the second week of January. I mean, it is what it is. There's position on Monday, Tuesday, Wednesday, Thursday, and Friday, and there's just one position, and all of these were just kind of out of my session, poor quality, stuff like that. Now I will start with Monday, which we had trade on EURUSD 30-minute time frame. It was supply zone, 3 in the morning. I'll show you guys this. So I still have it marked out. So I know some people took this. I'll explain to you everything about this here. Okay, so I again will make a video explaining this strategy to a very deep level, but for now, to draw everything out, you have a valid supply zone right here, bullish candle causing bearish movement down, and price is just pretty much trending bearish. That's all it is, right? Price is just taking out lows, until we get down here where we failed to take out lows. We put in a low right here, and then we put in a higher low right here. Price came up with a lot of bullish volume, and there's a few things about this trade. It is 100% valid trade. The reason it's valid is because right here, all of this consolidation right here before ending down, there's orders all above here. There's liquidity to sweep all above these, especially all of these highs coming down, all of these. So the fact that our supply zone was sitting right above all that stacked liquidity is just beautiful to see, and especially how hard it ran up. Now, there gets to a point where if it's coming up to the supply zone too fast, something kind of seems off, and it did seem like it had a lot of volume, right? Like obviously you want to see straight, like a nice cleaner straight line type of move, but it was a lot of volume, and that caused me to kind of zoom out, and I realized we're actually reacting off 4-hour demand here to the left. And I'll zoom out and show you guys. You can see it right here. I'll mark it out. Just mark it out roughly there. Yeah, price came down. We're in a beautiful bullish structure here, putting in higher highs, higher lows. And yeah, price came down, reacted directly off that 4-hour bottom demand, which is the lowest point before this major swing low. Lots of buying pressure came in here from this level last time, and yeah, price just ran up, lots of volume, and I think that's what pretty much caused that trade to lose. But yeah, for those two reasons, that's why I wouldn't have taken it. It doesn't really matter anyways because it was out of my time frame. This trade happened at 3 in the morning. Yeah, so this is 3 a.m. candle close. So yeah, those are the reasons I wouldn't have taken that trade. I know some people did take that trade. It's technically valid, but it's just those outside kind of conditions and factors that really would have caused me, not to take this trade. And yeah, like I said, we just failed to take out this most previous low. We came up with lots of volume, reacting from a 4-hour demand, all that stuff you don't really want to see, especially since, yeah, this is bearish movement, but higher time frame, we're trending very bullish. And again, 4-hour demand right on this area, reacted very bullish from it. So that is why I stayed out of that trade. I would have stayed out of that trade if it was in my session. And yeah, we just disrespected this. Lots of wicks, lots of consolidation up here, but it did end up continuing lower. So EU is definitely in a downtrend right now. Like for example, you have a nice supply right here, which we will be watching for Monday. So quickly just go over this. Yeah, you have a zone right here, which led to a lot of sellers came in. Whoa, chart just lagged. You have a bullish candle right here, lots of sellers came in. Price came up just like this. You have stacked liquidity all under these. Price is obviously always going to take that out, and it did right there, right? And now you have liquidity up above these highs as well. So price may come and sweep it, but I wouldn't really be surprised if it doesn't. A lot of times when price, I notice this at least, when price is trending down like this, and then we have a retracement, and it's very like choppy, it puts stacked liquidity under all of these lows, usually for price to sweep liquidity out on the high side and then go down to the bottom side. Very interesting to see how that works. I mean, that really truly shows there is like true liquidity sweeps in the market. It's crazy how like spot on some of that stuff is. But regardless, that was Monday's position. So that is off the charts. Tuesday, NAS 100 5-minute demand. So this is the one I took on an account that I wouldn't have even used anyway, so it's really no good for me. And then I will go over this position as well, but right here it is. Okay, so if you're looking at this, you might be thinking there's no entry signal, right? And that's because it's in back testing now. And live markets, and that's the problem with back testing, is you're gonna skip over some losing trades that would have, you would have taken live markets just because of this right now. In back testing, I would see this and be like, oh, this is an invalid trade. You know, there's nothing here. But in live markets, what you didn't see is price open up right here, push down to the bottom of the zone, and retrace and create a flip entry. And that is the trade I took. I took a flip entry right there, stop loss under here, and it ran up, put a higher wick in, and then just stopped us out. It's unfortunate you're gonna have that. Definitely an aggressive entry, but there is something about this trade that definitely I want to look into. I'm gonna start figuring out some stricter rules about this, because this is very interesting. How price has this low right here, price took out its high, this is our standard liquidity. Price comes down very strong. Right here, we swept out liquidity, and buyers came into the market, pushed it up, fell to break higher, and then we came back down. And it's technically still valid, like technically speak, like rule-based speaking, it is still valid, but it lowers the quality a lot more, because our strategy is in trending markets, and you want to see us sweep out that liquidity all under here while simultaneously tapping into a demand zone and then continuing up. When it's doing that, sweeping that liquidity and then failing to push higher and then tapping into our demand zone, that's starting to make bearish structure, because we swept that level of liquidity and now we failed to push higher, and now we're putting in a lower low. So it's very interesting. I didn't get too much of these on back testing, like specifically like that, and anything that's like obviously very big, like if it would have swept this and then pushed the whole way up here and then come down, obviously I wouldn't be entering that. But it's just these ones in between where it's like, it's not small enough to still consider valid, but it's also not big enough to like consider invalid. Yeah, they're very interesting. Like I said, I didn't get much of them in back testing. 2 years on every single pair, it doesn't happen often. But I think what I can take from this, definitely what I learned, is maybe on trades like this, don't take such an aggressive entry, like a flip entry. Especially when it did this, maybe we should play a lot more conservative, and I think that would have, that obviously would have saved us that loss right there. But yeah, like again, if I had to change anything, that'd be the only thing I'd change. Other than that, it's a standard good trade. I know some people took an L on me, or an L on this with me, but yeah, is what it is. And that was literally the only trade. Like I said, that was on one of my standard accounts with Alpha Futures, which I later found out that that's not what I want to be using if I'm going to be doing 1-4, so I just switched to an advanced account. So it really didn't have an effect at all. But yeah, that's Tuesday's position. So now we just have 2 more, which is Wednesday and Thursday and Friday. So EU 5-minute demand skipped. So let me see. I don't actually remember this one. Wednesday. Yeah, here it is. Okay. Skip. Okay, so this is going to be a very good one to talk about. So this was a trade that hit for some people. This is a trade that didn't hit for some people. So let me explain this. Let me go into replay mode first. Okay. I'll put it right here. So right here, price taking out highs, putting in higher lows, Beautiful, right? Beautiful structure. Price moving up, had, some choppiness, but that's kind of, good, especially on liquidity zones, because now you have a lot of orders under all of these lows right now. Price came down, A+ setup, everything's looking beautiful, literally amazing. This right here is an accuracy zone. We don't include that higher wick if it's higher than the candle after it. Perfect zone, right? We come down, boom, we tap, candle closed, right? 2 entries. A, you could have entered flip here, right? Now this is 6:55 candle. This isn't an hourly candle. Entering a flip here would be a little bit risky. Personally, I would probably do it on NAS 100 gold or something like that. On a Forex pair, not so much, right? That's first entry. Second entry, candle close. Good entry, candle close right here. This is perfectly fine. But problem with this is 1-4s are, they're definitely reachable, 100%. There's nothing against that, but stop loss is just a little bigger than what I'd like, right? So 655. We always have that choice to wait for an hourly bottom wick. Now you're not always gonna get an hourly bottom wick, okay? I mean, on a rare case, price could just open up, shoot right up, okay? Very rarely. And you can enter right here perfectly fine, but me personally, I'd rather wait for an hourly bottom wick to come in of some sort, and then if we start going up and start flipping, then I can enter there. Or if I can catch the bottom wick, then I'll enter at a cheaper price and have my risk reward a lot lower, so I'm not aiming for such a high amount, right? Just like that. So what happened with this trade was very interesting. So 655 like normal, new 1 hour candle opens up and it doesn't really move, and it just kind of sits here and it just boom, 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 and it just starts exploding to the upside. So I will go up one and show you guys. Yeah, so you can see we barely even like put in a wick there. You didn't really even notice it live market. It just kind of opened and then it just shot up. And I was like, wait a second, something is off. Like, why is so much volume coming in right now, you know? Normally on a 1 hour candle, you're always gonna get like a half decent wick, get some entries in. Even if you don't and you start to move bullish, you can always get in, break of candle, something like that. It was just moving with so much volume. I was like, what? So then I looked on Forex Factory, nothing. Looked on news outlets, absolutely nothing. And price came the whole way back down. I was like, I don't want to enter on this because I know something's up. And it turns out there was a unscheduled news event, and it was a red folder type of news event that caused red folder type action pretty much in the markets, and it caused a lot of volume, right? So all these pairs was just going up and down, and I was like, oh, well, like, obviously I'm not going to enter now because like we just had a red folder news event, right? So it consolidated here for a little. I know people that held, I know people that got out. Me personally, if I would have got in and it came down and started consolidating, I would have probably just kind of held, see if the momentum kind of went away and go from there. But the fact that I didn't get in and entering after red folder news would have just been kind of stupid of me. I always ask myself, like, if I enter a trade, am I going to be mad if this loses? And if the answer is yes, then a 9 chance out of 10 you're doing something wrong. And that's exactly the same thing in this scenario. Like, after you see a random news event drop, it was some like, I don't know, not earnings, but some like data report was like off or something. The numbers changed and it came out, and me knowing that and to enter a trade, and then if it would have just stopped me out, I would have been like, why did I just do that? I'm literally trading off random news. Like, obviously I'd be mad at myself, and if I'm mad at myself losing a trade, then obviously I'm doing something wrong. So that is the reason I stayed out of this. This one consolidated forever, and then a bunch of just volume came in, hit TP, and then it came crashing back down. It was a mess. I'm shocked some people honestly did hold through that. It was just very weird because, like, I mean, at least me, risk management, I don't know if I would have held through that. Like I said, it's difficult to say because I wasn't in the trade. And again, we just had a large volume spike. No one really knew what was going on for those first 2 or 3 candles. So like, you couldn't really make a logical decision. It was only like 10 or 15 minutes after that we actually found out what it was. So it's probably right around this point. So then you could have sat down and made a logical decision. I mean, if price was starting to consolidate, maybe it was starting to calm down and this wasn't really like news volume right here. Maybe it was just normal price action, right? I don't know. But at least for me, I didn't catch that initial entry. So it would just feel deeply wrong if I was entering after a red folder news event and then it lost. I could not get myself to do that. So I stayed out of that position. It did end up hitting. Some people was in it, some people closed at break even. I honestly don't think too much people actually hit profit on this. Maybe a handful of people, but I don't think too much people hit profit on that, to be honest. I think a lot of people got out after that or just missed the entry. But yeah, so Next position, Thursday, gold 5 minutes. So this is really the only, besides EU is a A+ setup. There's nothing wrong about the setup. It was just news really messed it up. But besides that, the only trade that wasn't messed up, that was A+, was gold. Beautiful gold trade. That was the last gold trade I took. Oh, I'm in replay mode, bro. That makes sense. Okay. So, here is this position. Now, this is the cool thing about gold. Gold completely trending down on at least a 5 minute time frame. There's no doubt about it. We're taking out all these lows, and price came up. We literally didn't even take out highs, and there's a valid demand setup. We're always taking this position, no matter if we're in a downtrend. No, like NQ, gold, and at least right now for me, platinum, always taking these buy positions because they're bullish indices. They're gonna be more lean towards buys all the time. This one's pretty much self-explanatory. Actually, I don't think we did fail. We failed to take out lows right there. We kind of double bottom. We have a valid demand zone right here on this bearish candle. We don't use accuracy zones or anything on gold, NQ, or platinum, so you could just say futures pretty much. Forex pairs, we do use accuracy zones. So price moved up, put in this low, took out its own high. We have a level of liquidity right here, which is what we want to see. Again, price came down, swept this level of liquidity, and a lot of wicks. We had this candle right here, new 1 hour candle. You guys can see this is what a normal 1 hour candle will look like with no news event. Instead of, like, you can see on EU when there's no news, it just doesn't put in a bottom wick and it just runs up, right? This is usually normal 1 hour candle. A lot of volume, upper wicks, bottom wicks, and stuff like that usually allows you to get better entries, right? So 1 hour candle, I don't know what this looked like live, so I don't know if it could have been a flip entry. I don't know. We could have opened up and put in the higher wick, came in, put the bottom wick, and then closed right there. Could have. I don't know. I wasn't awake at this time. I will admit it was 3 in the morning for me. So this candle right here, though, 2 entries you could have got here. If a lot of volume started coming in, I'm sure people was looking to take break of candle because this is a new 1 hour candle, and we already put in the bottom wick into the zone. But we never got the break of candle entry, so it would have been a standard candle close entry right here. So wick would be under this hourly bottom wick that's into the zone, the deepest wick into the zone. And yeah, 1 to 4s ran straight to TB. Beautiful trade. There's really nothing to talk about there. And like I said, I woke up at 4:30, which was right here on, I don't know why it's this candle right here, and initial entry was just a little bit below, so it would have been right here. I mean, last candle I would have been able to almost catch an entry on, would have been like, yeah, 410, maybe 415 area, but yeah, just unfortunate I was just a little bit too late there. But yeah, it's just something I'm gonna have to deal with. Living in the US, I'm gonna end up missing the first hour and a half of price action of London Open. It's just, it is what it is. There's still a lot of profits for me to catch. I did my testing, I ran the numbers, especially on those time frames, and especially adding some better pairs to my pairs list. So yeah, it's just something I'll have to deal with. You know, I'm gonna miss some trades, also miss some losses as well, you know. But yeah, good position there. That was really the only A+ setup we had all week. Like I said, besides EU, but it got kind of screwed over by news. And yeah, not too much to really go over in that trade. Like I said, trending down, but we're always taking buys on NQ, gold, platinum. All of those pairs were always going to be more lean towards buys. They don't have to be A+ in trend for buys, but for sells, I did take shorts in back testing, and I only took them in good conditions. You know, conditions like this where we're consistently taking out lows. But you know, the second we start failing to take out lows, I'm not interested in sells, right? I want the clearest A+ structure for sells because they're not bearish indices, they're more bullish. They're always going to be lean towards more buys rather than sells. So yeah, that's the reasoning for that trade. Beautiful trade there, again, 4%. And at this point in time, I guess I did take that NAS trade on the standard account, but other than that, literally no trades. So then we had today, and there was one trade on NQ, which was actually early in the morning, and it just invalidated, but I do want to share with you guys something interesting about this trade. So this, good trade, right? Looks beautiful, right? We have all this stack liquidity, which I really like to see. All these orders under here, price comes down super strong and just runs up. Beautiful to see. But you zoom in, you realize price actually invalidated this zone. For my strategy, right here is the bottom of the zone. If price wicks under it in any way, it makes the zone invalid. And again, seeing this trade like live, this was at 340, so I didn't see it live, but if I would have saw it live, I would have known almost that pretty certain that this trade would have won. And do I still take it? No, never still take it, because that starts causing bad habits. Even though if you think it's going to win, if you start breaking your rules and it wins, then you're going to be accustomed to start breaking your rules more often to try to catch those wins. It's very important that you don't chase that, because this is an A+ setup. We literally broke past that demand zone by like not even a pip, and beautiful like flip entry you would have gotten right there. And that's just something you have to deal with. You have to follow your rules no matter what you think a position is going to do, and it's just going to inflict lots and lots and lots of more bad habits down the line. So it's very important you follow your rules. Again, your 1 to 4s would have hit again. So, but yeah, that's literally it for this week. And this position, again, it wasn't valid, but I kept this up here because I did want to share with you guys why, you know, it's definitely important to not break your rules, because yeah, this would have won. I would have known it was gonna win. This is an A+ setup, like top line setup. I really like these setups that are making stack liquidity. And what I mean by stack liquidity is, oh gosh, it's not just price is doing this and sweeping one level. When price is, you have your demand and then you're moving like this, and then you sweep it, and then you tap into the demand, and you have all these orders just build up, and you sweep all the orders underneath, tap into the demand, continue within trend, and then continue pushing up. Top of the line setup. I love those types of setups. They just perform so good in back testing. And yeah, even though you see that and you know it's invalid and you take that trade, and yeah, you start winning, you're gonna be like, oh, I can just break my rules more often, and then you're gonna start down a bad path. And yeah, you do not want that, trust me. So yeah, that's I think someone else actually talked about that as well. But yeah, that is literally it. Delete that, and that is it for the second week of 2026. So we'll have the third week of 2026. Let me pull up my camera here. We'll have third week of 2026, and then that'll be I don't know what I was gonna say, but third week of 2026. Hopefully we get a lot more trades. This week was definitely slow, so usually slow weeks like this. Next week it'll pick back up. I know futures is definitely they're kind of a little choppy right now, but I know once they start getting in trend and start continuing with bullish momentum, bullish price structure going into 2026, it'll be a lot easier to trade. So we just have to kind of push through January and February. As of right now, beginning of the year, spreads are still pretty bad on Forex pairs. But like I said, I switched out my futures account for a better account, more favored towards high risk reward. And since that standard account's kind of close to passing, it's still pretty hard because of the consistency rule was just so bad. Like I made 2,100 in a trade, cool, but now I have to make 2,100 again in a trade just to match the consistency rule, so it's not like one trade is over 50% of my profits, and then I'm gonna have to make another smaller trade to offset it. It's kind of a mess. You can literally hit the profit target so easily. It's just the consistency rule that unfortunately holds you back. But yeah, at least with these advanced accounts, like I said, I got a brand new account. and I wasn't even able to trade it this week because there was just no setups, no valid setups. So I just stayed patient, sat on my hands. I worked on some other things, and yeah, we'll be ready to hit that account next week. And like I said, yeah, we'll see if we get any good positions. If we do, most likely I'll just make a trade recap, maybe of that position, especially if we get a winning position. I'll go in depth with that. But yeah, if not, you will see it on the weekly recap of next week. Right now I don't have anything scheduled, so I may put out another video, maybe a back testing video or something. But yeah, like I said, my main focus right now is just I have all these skill sets down, I have all the data down. I'm just trying to hammer out accounts as fast as I possibly can, and pass these accounts and start getting payouts. So that's really my main focus right now, but I'll still be posting videos, of course. I'll still be posting back testing videos most likely, because that's what I'm doing most of the time. But yeah, that's pretty much it, boys. So hope you enjoyed this, hope you learned something. I hope next week we get a lot more trades. This week, like I said, very slow. But yeah, that's pretty much it, and I will see you boys on the next video.